Hi guys, welcome again to Josh FX Pro. This is the weekend. I hope you all are having a good weekend, and we are here again to backtest for the week, to do a backtest for the week. All right. So we will be backtesting some couple of pairs. I'm going to be backtesting some couple of pairs, looking at how the week played out, and if we were in the week, what would we actually would have been looking out for, what would have been seeing. That's how That's what we want to look at. Okay. So, and also get updated on market movement, market strategy, and how the market get to play out all this time. So, all right, let's dive deep into it. Okay, so this is Crash 1000, and the yellow line, should I make it more clear? Maybe some people might not be saying, okay, so I think this line is better. Yeah. I use the yellow because it doesn't obstruct the candle wick. If I zoom in, I don't like see the wicks where the wick stopped and all of that. So I use the yellow. If I change it back to yellow, you would see that the wick is clear. It's more clearer on the yellow line. All right, let's go deep. So the point, we had market trending all the way from here, right? This was a trend. Forgive the drawing, but yeah, I'm just trying to make sense out of it. So we had market trending all the way from here. Market was bullish all the way from here. Yeah, market was bullish. And then at some point it became bearish. So we wanted to see like the last low. This was like the high. We had the high here. We had a high here. An impulse, the beginning of an impulse, or what people call swing high, right? Whether it's a swing low or swing high, however, but it's a swing point. So we had market do this. So I'll use this to indicate we had market do this, come down here, push again, came down here. You see the space in between, right? Came down here and pushed all the way here. So yeah, what we have here is kind of like a trending structure to the upside. So what we're looking at is we're looking at where the market shifted direction or shifted momentum, where the momentum actually changed, or where the character of the market actually changed. So this was the last low point, this area here. This was the last low before we had the last high. You understand? So market did a whole lot of push all this way. And while coming back down, this was like the last high, if you look clearly, all the way from here. We had low, we had a high here. All these ones are like consolidated highs and all, but finally we got into this low here, right? Before we now had this push up here. So we had a series of down too, but all this downtrend push didn't close below the last low that we had here, right? So what we had, if I should zoom in, you would see what I'm talking about. So this was the area at which markets finally pushed below this point. You understand? This was the area at which it's not looking clear. I think I should like zoom deep. Yeah. So if I shift this in a bit, okay, so you see what I was talking about. The body of the candle which closed here, this went below it, even if it was just a fraction bit below, but it closed below it. So, and we would consider it as a move because the body closed below the previous body low, right? Below this low here. So this indicated that there was a change of character around here. This is why I don't use wick, because if I wanted to use wick, I would wait until it closes below this point, which is on this long candle, and you would have missed out on all this move. I'm not saying it's not still going to come back. I'm not the market, I'm not the banks. So it may still get to come back to this point because that's probably taken out this point and also this point here. So it may still get to come back between this point because this has now become like the new high that took out that low here, right? So you may still get to push up a bit because we have a massive fair value gap here, a massive imbalance gap or fair value gap here. So it may come back to retest on that area before pushing back down. It may do that, it may not do that. So what we may see is kind of like something like this, pushing back to this area somewhere here and down, right? Well, if that move happens, then we could take it on this current week that we are about to enter, right? But if it doesn't happen, this is just a study of last week. So from last week, we know market go for liquidity. Market would love to go for liquidity. So we had this area to contend with and we had this area, but this was like the main overall um high, what do you call it, order block zone that created this point, right? So we could say this is another block, that's fine, but I wouldn't say this is another block though. I would rather say this is another block here, right? But we already know market will want to take out liquidity first. A lot of people who will be selling here, who will be selling here, stops will be above all this place, and market would have actually come tap your stop and start shooting down. So sorry. So yeah, so this week we had this move. We had after we saw this on a Tuesday, Wednesday. On a Thursday, this was where the market had to go tap in. So if you go up to a 4 hours time frame, on a daily, a this is actually a fair value gap on a daily. So we had a fair value gap here on a daily, right? This same area where you have your this 4 hours order block. I think we should go deeper on so we'll see if there's any the other block is valid. Oh, it's not even another block, it's actually a fair value gap. So we have both fair value gap and daily, both 1 hour fair value gap and daily fair value gap in the same spot. Had the same spot where you have your daily, we also have your 1 hour here. So if I should draw the daily, you would see that it's in the same location. So it's kind of like a double confirmation in one part. There's a gap that needs to be filled on daily time frame. There's also the same area, there's a gap on 4 hours time frame. So it's best to understand that when market gets there, market is definitely going to turn up a reverse. Market is definitely going to reverse. So it's just best to stay off the market and wait for it to do its thing. So I want to copy out the entry. Someone chatted me up on Instagram and was asking me how about the entry strategy. So I want to put it here. So yeah. Okay. So I don't know if you would understand it, but if you've been following me and my previous videos, you would actually see that I once put these things. I once had these stuffs on my what do you call it? I once had these stuffs on my previous videos, like the early videos that I started making on this. I once had it, and some of them, I think, yeah, in some of them, I just got tired of like putting it out here. But while trading, I know I use the stuffs as well. So one of the rules, I think that's the first rule. Yeah. Yeah, that's the first rule. So from the first break of structure, then market price goes straight to the other block without trending there. I think I'll have to rewrite this stuff so it will be clear, but I understand it. It's me that wrote it, so I understand what I'm actually writing. So without trending there, trade on the first reversal candlestick pattern. So firstly, you'd have things like your 2 to 3 rejection confirmation on the other block of fair value gap zone. and then the trending moves here. So this could be built up, right? It could be built up. And I think it's part of my entry strategy. There's one third one that we discovered along the week. A part of an entry strategy, what the market does while um market is moving. So we discovered that along the week. I would add it up. I would add it up to that, but later, probably before the next video, I'll add it up. Okay, so at this point, we had market after the creating a low here, after we had our low. Remember, this is like the low, the range, and this is the range high. So we intended that this was going to be the range high. So all this was liquidity for market. Market had to come grab this, grab this, grab this, grab this, and came all the way here. So for the 2 to 3 rejection, we had 2 or 3 rejection. We had this first candlestick, which is an evening star. It came there and rejected. And we have the second one that tapped in there as well and rejected and closed as a hammer. You get. So this confirms the 2 rejection. And the move going from here, it just first break this structure here and went straight without trending. You know what I mean? Like without, after it breaks the structure, it starts trending. Without trending, it just went straight to the other block zone, or fair value gap zone rather, and closed. And closed there and printed a candlestick reversal pattern. So the reason why I didn't enter here, I would have entered here if I was to see this, but the reason why I wouldn't enter it is because a proper candle, evening star candle stick pattern, this has to close below the wick of this. It has to close below the wick. I would, can I see something like that? Okay, this is for the bullish side, right? This is for the bullish side. So this has to close below the wick of the middle, right? This has to close above the wick of the middle because it's for the bullish, right? And yeah, something like this. This is bullish as well. I don't know if I can see bearish. Okay, this is bearish. Perfect. This is bearish. So you had this candle, this candle, this candle. See how this one closed below this week, below all these things happening here. So it's kind of like a better move and a better confirmations to reverse the market. So when you see something like this would have probably been making you shake because you've seen it, right? So market wasn't ready as at this point. Market needed to go back there and tap in a few more times to pick up the last orders and all, and then close as a sell. But then if you're going to take it on a 1 hour time frame, maybe you don't trade for hours, then this was, by the way, this was a 1:5.6. Yeah. So if you're not trading for hours on a 1 hour time frame, you see, okay, this was actually a better one, right? This was actually a better one. But then this is where my entry was on a 1 hour time, on a 4 hours time frame. Yeah, but on a 1 hour now, we see, Mm. sorry, we see how market broke off the structure. Same um rules would apply. I think I should put this down here. Yeah, same rules would apply, right? You see how market broke off the structure here, and we're still within the trading zone and started trending to the location. There was a trend. It broke this high, broke this high. So there was a trend. So the next thing, that was like the rule 3. So the next thing to do, if there's a trending structure to the order block or fair value gap zone, then wait for a break of structure to the traded direction. So the next thing to do is to wait for us to have a break of structure. But this could count, this entry here could count because we had the first tapping rejection, second tapping rejection on a pure candlestick pattern, a pure reversal candlestick pattern. This is the sell evening star I was telling you about. So this is stronger to prove that this market is changing direction, or rather they are done with this area. And this is kind of like a structure, you know, the head and shoulder structure. So this is kind of like a structure. So if you had entered here, you would still be in profit. I think you would even be in more profit. What's that? 1:8. So it's good. If you had entered here, 1:8 is good profit. Your stop will be just above the structure, right? So it's good profit, and you would have made a ton of money as well. If I had seen this last week, I probably would have taken it, but I didn't see this. I think I was just focused on there was one other pair I took last week. I think something 70, is it VIX 70? VIX something. I can't remember, but go through if you check my YouTube videos there. Let me check. Yeah, this is my YouTube video. Yeah, VIX 75. Yeah, VIX 75 18. So what I do is I don't trade um multiple pairs in a week, except I've had like a loss. So I'm trying to take the next opportunity to focus on the next opportunity so I could still make the money and make my profit. So, but once I catch a good trade, I hold on to that trade. But I analyze a couple of other trades as well. So it's not like I just stay. But I hope you get what I'm saying though. So, all right. So that is for this one. Yeah, that is for this particular currency or pair. So if you were following this market, you would know, you would see, if you're following me from the beginning, you would see the breakdown, how I broke down these things. And if you're going to trade this week, please follow through with the same breakdown pattern, or the same, look out for the same options, the same things, all right? So if you need to write this down, still write it down, pause your video and write it down. All right, please do well to subscribe. If you're not yet subscribed, do well to subscribe, drop a like, comment, tell me what you think in the comment section, and share this video if you must. If you can, share this video for someone who may need it to improve in their trading career or trading life. All right, so let's grow together and let's learn together. See you guys in the next video. Bye.